Right. Hello, everybody. Happy Thursday. Happy Thursday. I am back. Thank you all so very much for being patient with me, man. Listen, the transition right now is definitely a challenge, but I definitely appreciate everybody that is just continuing to rock with me. You know what I'm saying? Bearing with me, of course, and not holding it against me, y'all. At least I'm coming here. I'm steady coming to give value. So I'm gonna give everybody a minute to come in. I'm gonna test this out one more time with Instagram and on my Prosperity Calls page. Now, if this don't work this time, I've gone live multiple times and if it still doesn't come through, then I don't know what else to say. Like at this point, I'm just like, yeah, Instagram just ain't it. That's just what it is. And I just accept defeat over there and let it go. Because I've been attempting to go live on Instagram for, I don't know, I'll say maybe 3 weeks now. I've been attempting to go live and it just keeps saying the same thing over and over again. Like it's not showing, it doesn't happen. Or at least I'm not seeing the notification coming through. So I don't know what's going on with Instagram, but we'll see. I give it a minute because I was late. So I apologize, y'all. You know, y'all know how it is when you have kids. You know how it is. It's like there are plans in place, but things change. You know, you have to adjust to that, and so that's where we are right now. But before we get into everything, I wanted to do a quick introduction for those who are new to this YouTube channel, who is new to Facebook, who is new to Prosperity Calls Instagram. My name is Leona Clark, and I founded Prosperity Calls back in 2020, July of 2020. I started doing a bit of trading in the crypto space. This is back in like 2017. I know I told this story, but hey, if you haven't tuned into part 1 or any of my other live streams, then guess what? You're getting introduced to me now. So I initially started trading, or at least I got introduced to trading in a cryptocurrency market first. That was in 2017. I don't remember the month, y'all, so please don't ask me. Just being honest, I don't remember the month. But anyway, so that was kind of short-lived because there was no education. There was no foundation. It was just buy some Bitcoin from Coinbase and then open up a Binance account and transfer the Bitcoin from Coinbase to Binance and start trading. So me doing my own research and whatnot, it just was too much for me at the time, especially without any clear guidance, no education or whatnot, and nobody that I could really just genuinely ask questions to get a real answer. Because of that, I just sat it down. So then 2018, fast forward to that, I was introduced to FOREX, foreign exchange, which is the foreign exchange market. I was introduced to FOREX trading in 2018. And, you know, it was better. Of course, like the introduction was a bit better. There was an educational platform that was being made available to me and others, but the timing wasn't right for me. I was really busy at the time as a first sergeant in the Army, and so my days were jam-packed with other people problems, putting out fires and whatnot. So I just didn't have a bandwidth. Like I could see myself doing it. I really could see myself trading, but it's just the timing wasn't right, in all honesty. And so were there some things that weren't quite right, you know, at the time with those people who introduced me? Yeah, but that's not all on them. Like, honestly, a huge part of it was it's just the timing for me. Okay. And then fast forward to 2020, when I was pregnant, about to give birth, I made that decision. Like, it was no question. I do not want to stay in the military any longer because I want to watch my child grow up. I want to be involved in her life every single day. I want to be there. I want to be able to say, yes, you could do this. No, you can't have that. Yes, you can have that. No, you can't. You know, I wanted to be involved in everything. And staying in the military, there was a possibility of me deploying, you know, and whatnot. And I was like, I don't want to leave her. I got it. I'm married, but I just don't want to leave her. You know what I'm saying? Like, that was the fear for me. So I decided in 2020, like, yo, I am done. I no longer want to wear the uniform. I don't want to leave my child. Being a first time mom, like I was like, I just didn't want to do it. And so for me, it was very important to learn something that I could do on my own and I not have to be stuck or feel stuck, feel like someone else is pulling the strings on me. Because remind you, I had been in the military for 20 years. I know my lips felt super dry just now. Sorry, y'all. But yeah, they feel better. But yes, I had at that time I was embarking on 20 years of being in the military, and so I'm like I think it's about time for me to let it go, and that way I can do something where I don't have to worry about customers. I don't have to worry about providing any type of service. Like I just want to do something that I could just do on my own time and be free to move around with our little one, and trading was that thing that had never left me. But again, like I said, the time wasn't right. And so when I started back trading in 2020, I'll say it was either May, June, I believe. May. It was May. I want to say that was the month that I started back learning. Y'all, I went from scratch. Yes, I knew what pips were. Yes, I knew a bit about support and resistance. Yes, I knew, like, there was a lot of stuff that I understood, but I was like, no, I want to start from scratch. I want to start completely over. So I went through the whole educational process, from what is Forex to what is a pip to all of that. I went through everything all over again. Why? Because I really wanted to get it this time around, because I wanted this to be my main thing. Because I get to do what I want to do. I get to move how I want to move. I enter a trade when I want to enter a trade. I exit a trade when I want to exit a trade. There's no cap on how much money I can make. All of that stuff was going through my mind, and that's what I wanted to focus on. So with that being said, this is why I created this series to help people out, because I have been listening to people that's a part of my community, and also listening to people who aren't a part of my community, and just really putting together something that can help people who have never ever traded before, but also for the people who have traded but have not seen any form of success from trading. I'm talking about you haven't taken out any money at all from your broker account. You have blown multiple accounts, and you're kind of on the verge of just throwing in a towel when it comes to trading. I want to provide something to help you out, so that way you don't throw it away, especially if you feel like this is definitely for you. So we're going to get into it, because I see y'all are coming on. I'm going to close out Instagram because for whatever reason, again, it just, I didn't see the notification, and I should have seen the notification. And I don't know if it's because I'm on here and I didn't catch it. Maybe they sent out the notification. I'm not sure. But normally I have a few people that come on Instagram, so I don't know. That's like this is the third week that I've had an issue with that. But anyway, moving on from Instagram, y'all. So that's a little bit about me. So what I do today with Prosperity Calls is I just give the information. I teach people the foundation, the basics, and then of course more intermediate as well as advanced level information pertaining to trading. So that way you could go from not knowing anything at all to now, okay, I know a little something, to okay, I know a lot more, to man, I'm ready to go live. I'm ready to put my money into an account. I'm ready to trade my own money and be able to withdraw and pay these bills, or put money into a vacation fund, or whatever you want to use your trading broker accounts for, right? So that is what I am doing, and that is what I will do until God tells me otherwise. Okay, so let's do this, y'all. Do me a favor. I gave you the introduction. Do me a favor, as you have come on or coming on. If you're watching live, replay people as well. Please drop your city, drop your state, drop your country where you are tuning in from. If you are ready and you want to get into this information, give me a thumbs up on YouTube. Facebook, y'all, give me the like or a heart, whichever one you feel comfortable with. On YouTube as well, make sure that you hit that subscribe button if you have not done so yet, and also press that notification bell so that way you are notified of when I am live, okay, every single time on YouTube. And then lastly, y'all, if you find at any point when I'm doing this live stream, if you're finding at any point that this is helpful to you, share, share, share. I guarantee you, you know someone who is curious about trading. You know someone who is currently trading, whether they are doing great and they can confirm what I'm saying, or whether they are struggling. They're like, listen, I'm gonna just, roll with what she's saying. I'm gonna start from scratch. I'm gonna start all over again. And it doesn't have to be with me, y'all. What I want to do is make sure that every single person that hears my voice at least gets the information for them to go out and do their own due diligence. All right. That is the goal. Remember, y'all, with trading, there is risk involved. So as you're sharing this, you're letting it be known, hey, I'm sharing this because I'm listening. You can listen if you want to. Y'all, I personally, me, Leona, I am not a financial advisor. I am not a licensed trader with the CFTC or any other entity. Okay. I am a student like most of you. I am studying these markets. I am growing in these markets. And what I am doing is showing each and every one of you the things that did not work for me, but also the things that are working for me. And now it's on you to take what I share, do your own due diligence and research, do your Google search, get on ChatGPT, whatever you feel you need to do to help you. Go to somebody else's YouTube channel. I don't care, as long as you do additional research and then make an informed decision on how you want to invest your money into the foreign exchange market if you're going to trade that, or the cryptocurrency market if you're going to trade that. Okay. So remember, all of this trading and investing really does have huge risk, y'all. I do not want you to put in any money into any market. Doesn't matter what the market is. Do not put any money into any market that you cannot afford to part with. Okay. Don't put your light bill money into the market thinking you're going to get some quick flip. You're going to be very disappointed. Don't put your mortgage money into the market thinking you're going to get a quick flip. You're going to be disappointed. Okay. You're going to be upset. You're going to be frustrated. You're going to be mad. Okay. You might even be downright depressed depending on, how much money you're putting into the market. Please only put money, disposable income, into the market. Okay. Now we've got that part out the way. I'm going to do a quick recap, y'all. Really quick recap on part one that we did on Saturday. Okay, so we talked about a couple of things. We talked about Forex basics, right? We talked about what is Forex, which again, foreign exchange. This is the foreign exchange market that I'm talking about today. This is a global market for trading our different currencies, meaning like the US dollar, meaning the Canadian dollar, meaning the Mexican peso, the euro, the pound, the yen. All right, these are different currencies. We are able to pair them together and trade and make money in the foreign exchange market when the market is going up, but also when the market is going down. Y'all, the foreign exchange market is available 24 hours a day, 5.5 days a week. Okay. And in this market, we're looking at the amount of money that's circulating somewhere between $6 to $7.5 trillion every single day. So listen, me sharing this information with y'all today, giving you things to go research, giving you a homework, all of that is to help you. So that way, if you want to go in here and you pull out $1,000 in a day, great. Because that's $1,000 out of 6 to 7.5 trillion that's circulated anyway. That's not going to stop me from making money, y'all. Hence why I'm not shy about sharing information pertaining to trading. Because what I make will not hinder you. What you make will not hinder me. Everybody got it? If you got it, let me know, So, all right, I see you. Tyrus. Welcome from Louisiana. So, the other thing that we talked about as far as the basis in Forex is our currency pairs. So y'all know that we have two parts of a currency pair. It's the base, which is our first currency in that pair, and then our quote. That's the second currency in our pair. So these pair values or these pairs give us a value that tells us how much the quote currency is needed to buy one unit of the base. Yeah, at the end of the day, it's just telling us how much money we need to buy one or the other. That's it. Whether that's the euro or the US dollar, doesn't matter. That's what that breakdown does for us. Okay. We also talked about pips and lot sizes. All right. So remember, a pip is just a small movement in the foreign exchange market. It's 1 point. Okay, so 1 point to the upside, you make some money. If we're looking to buy and we're expecting the price to go up, if we're looking to sell and we're expecting the price to go down and 1 point down, that means we made some money with price going down. Got it? Okay. And then the lot size is nothing but kind of like a bet. We're betting in the market. So each lot size represents a dollar amount or a euro amount in other currencies cases, but it represents your country's currency amount. Okay, larger lot sizes, like I shared on Saturday, they increase the potential for both gains and losses. I told you guys on Sunday, this is a huge suggestion. Again, I'm not a licensed trader. I'm not a financial advisor or anything of that nature. I'm telling y'all what I have done, what hasn't worked for me, but also what works for me. Making sure that moving forward, when you want to consider getting into the market, calculate how much a lot size that you're anticipating using, how much that lot size could cost you if you were to lose that trade. Do that first, then calculate how much you stand to gain from the market with that lot size. Well, why do you want to do that? Because you will be less likely to risk or just go into the market blind when you know, okay, I stand to lose $50 and I'm not comfortable yet with losing $50 on any given trade. Got it? So if you calculate what you stand to lose first, now you can say that lot size is too high for me, or it's just right, or it's too low. I need to bump it up some because I've graduated. My account balance is higher. I feel more comfortable with losing $50. I feel more comfortable with losing $100 because I'm standing to gain 200, 300, 400, so on and so forth, based off of my analysis. All right. So those are 3 things that we talked about with understanding the Forex basics. I also covered time management strategies, y'all. We talked about looking at your schedule, okay? Looking at your daily and weekly time, like how much time can you put to the side to consistently dedicate to learning and practicing trading in the foreign exchange market. Also prioritizing those learning blocks, starting small, dedicating an hour. If you can't do an hour, at least do 30 minutes. How many days per week are you going to take that hour or that 30 minutes to learning? And then making sure that you incorporate a break time that focuses on or a time that focuses on specific things, like you're studying, marking up your charts, you're studying, identifying trends, you're studying, identifying how often the market is ranging, so on and so forth. Okay, making sure that you're doing that. And on top of that, with the time management strategies, y'all, I also discussed eliminating distractions. Put your phone down, put it on silent. Make sure that you're not on social media at the time that you're attempting to analyze the charts. Okay, when you can identify those things that are distracting you, you can reduce those time wasting activities as well. Like I said, with the social media, looking at TV and doing other things. So now you can just focus on trading, or at least studying how to trade in the foreign exchange market as a beginner. Okay. And then lastly, I talked about balancing learning with your day-to-day commitments. Okay. We all have lifing right now. None of us are exempt, hence why I was late today. All right. I just had to pivot and make an adjustment. I got a 4-year-old, y'all. Sorry. But some of you that are parents, y'all understand. I could sit here and say I'm going to do this at 1:30, but my kid could have something happen. And guess what? That's going to take priority over coming over here and doing whatever it is I said I was going to do. I can still do it. It just won't be at 1:30. Okay. So we just have to balance those things. So number one, when it comes to balancing those life commitments, those day-to-day commitments, setting realistic expectations. That was something I talked about. Please, y'all, there are too many folks that come into this market, come into this space just in general as a trader, and setting these unrealistic expectations, y'all. Set achievable goals. Make sure you start small. Your end goal could be huge, but you're going to have to break that big goal down. Okay. So let's say, hey, I want to ultimately earn $1 million every single year consistently. Okay, cool. Well, you're just starting out. So if this is your first exposure to trading, yes, your ultimate goal may be to consistently earn $1 million as a trader, annually. And we're talking about profit, right? So that could be your end goal, but you got to start somewhere today. Hey, can you be consistent with showing up with studying? If your answer is yes, all right, cool. Well, show that. How many days out of the week are you studying? 3 days out of the week, 4 days out of the week? Okay, cool. How many minutes each day? Is it 30 minutes or is it an hour? If you are consistent for that week to do 1 hour every single day, right? Or that 3 or 4 days out of the week, then great. All right, now let's do it another week. If you're doing 30 minutes, then okay, cool. 30 minutes every, 3 days out of the week, 4 days out of the week. Okay, cool. Now let's do it another week. You have to do little stuff every single time that you said you're going to do it in order to ultimately at one point get to that $1 million per year annually, right? In profit, I should say. So in order to get to 1 million in profit every single year as a trader, we all, and I'm speaking to myself, y'all, I'm not talking to just you. I'm talking to me too, right? Because I haven't made $1 million trading yet. But I know that the growth that I've experienced over the past almost 6 years of trading, the reason is because there were things that I had to work on, which was consistency. Consistency in doing the stuff that I said that I was going to do according to my trading plan, my risk management plan, working on my emotions, managing my emotions, becoming more emotionally intelligent. That's a lot of work in itself. So you're talking about definitely once I identify these things, that's 4 years of work to get myself to the point where, okay, now I can start seeing consistent positive results, right? So that's number one. Set those realistic expectations, y'all. Start small. You can have a really big end goal, but you have to break that end goal down into really small, digestible things that you can do. Okay. The second part to that is work-life balance, y'all. It is important to balance learning FOREX with your personal life. Make sure your trading plan doesn't negatively impact family or your work commitments. Work around it. I have been working on this for a long time, y'all. So it's not like this is something that I'm saying just because. No, I'm still doing that today. Hence why, like I said, hey, I showed up late to the live stream. I got a 4-year-old, y'all. Do what I got to do, okay? But I make sure that I schedule times for me to look at the markets, to analyze the markets when I know that there is a potential for it to not impact or hinder what's going to happen with my family, right? And then last part to that, balancing learning with life commitments is consistency. Consistency. Y'all, by setting a steady schedule and sticking to it. Even with limited time, y'all, you can gradually progress in your trading journey without sacrificing other responsibilities. This will take time, though, okay? You have to get to that point. Just remember, y'all, with these key points, all this does is set the foundation for developing both your FOREX skills, okay, and a routine that fits your busy life today. If at some point you're saying, hey, I want to be able to let go of my job and I want to do X, Y, and Z, and I want trading to fund that, that's great. But you got to work with what you have today. So remember, y'all, if you missed part 1 and you want to get more details, get down in the weeds, go down the rabbit hole with me. It is a pretty long live stream. Break it down, okay? 15 minutes at a time, 20 minutes at a time, whatever, until you watch the entire live stream, okay? You can click the link in the description of this video and it'll take you directly to part 1, okay? Remember, each of these sessions have homework. So that means you're going to have a little catching up to do, but it's okay. All right? I think you can do it. I believe you can do it. All right, so I already know we're not going to be able to get through this whole part. So I'm going to start us off and then we're going to have to pick up next week because it's already 12:30. And I promised myself I was going to keep this to 1 hour and it's already there. So today's focus, y'all, we're going to talk about technical analysis. We're going to get into it and then we'll pick up next week with finishing up with technical analysis, possibly being able to get into risk management. And that'll depend on how much information is being shared. Okay. But I want you to think about this though, with time management, not time management, with technical analysis and risk management, managing or mastering these two areas is going to help us as traders to trade smarter. Okay. Even if we have limited time, if you have a very busy schedule, trust me, I get it. Okay. But here's how mastering technical analysis and risk management is going to allow you, okay, as a trader to trade smarter and more efficiently. Even if you have limited time, this is going to help you to pretty much make strategic decisions without needing to monitor the market consistently. So, number one, when we're talking about how technical analysis is going to help us, we identify key opportunities. So, technical analysis enables us to quickly spot trends. So there are going to be some terms that I'm going to say, write this down. Okay. So if you want to get ahead of the game, because we're not going to be able to touch on everything today, you start doing some research this week. So number one is trends. We're going to spot trends when the market is moving up consistently, when the market is moving down. Trends, TRENDS. Write that down. This is something that you may want to do a bit more research on, even though I will be able to talk about this today. Okay, and show you on TradingView. TradingView is another thing, I believe, for those of you part of the Prosperity Calls community. I put that in the email for y'all to make sure that you have it open and available. If you're not part of the Prosperity Calls community and you didn't know, I want you to pull up TradingView. Okay, as a matter of fact, let me put this in here so that way y'all have it. www.tradingview.com. So if you are new, there we go. So if you are new to trading in general and you're like, Leon, I don't even know what that is, there you go. Okay, you can go on YouTube, watch a video on how to create an account. It's free. Okay, unless you want to do like certain things and you have to pay for it, but for the most part, TradingView is free, and you can do what I'm about to show you. You can do all of that for free on there. You don't have to have a trading account yet. All right. So again, it's going to help you with spotting trends, TRENDS, on TradingView. If you don't have a broker yet because you're very new, you can go there, click the link. Hopefully you're able to click it in the chat. I'm not sure if that works, but if you can, copy it and then put it into your search browser, okay, and a web browser. And then also helped you to identify support, resistance. These are things that are key for spotting reversals. So if the market is going up and then it hits something called resistance, then it can help you to identify when you should start selling to make money because you're anticipating price going down. And then the opposite is for support. So I want you to write down support, 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 and then also write down resistance. Okay. All right. Resistance. Write that down. These are things that are going to help you when you are analyzing the market, when you're looking at the market and you're like, what is it telling me that I should do or shouldn't do at this time? Okay. This allows you to identify high probability trade opportunities, but it also helps you to focus on quality trades instead of guessing or reacting to every market movement, especially like if you hear someone talking about something on TikTok or YouTube and saying, hey, I'm jumping into US 30 and da-da-da-da-da, and you have no idea what you're looking at and you're just going to jump into the market because they're doing it. That is a no-go. You should know how to go to the chart and look at it for yourself and say, oh, this is a really great setup, or no, I don't see why they're entering this trade. Therefore, I'm not going to enter it because I don't see why they're entering it. Got it? Okay. Also, technical analysis helps to save time. Why? Because we're able to use different indicators if you want to. It helps us to identify different patterns, price action patterns. It can help us to make quick, informed decisions based on past data. I am a huge believer in collecting data in the market. Y'all, it took me last year I'll say, no, what's this 2024? So I'll say towards the end of 2022 is when my mind, it clicked in my mind, Leona, focus on just collecting the data in the market. That's it. Write in your trading journal, get very specific, get into the details so that you understand when you go back and look at it, what happened in the past. Now it gives you a better idea of what could potentially happen. Y'all, when you are collecting data like this and you're using the past, this reduces the need for you to constantly monitor the market. You know how some people say, I don't have time to be staring at charts all day. You don't have to stare at the charts all day. I don't care if you're a scalper, a day trader, or a swing trader. None of us should have to be staring at the charts all day unless you are studying. You're studying different pairs and you're going back in the past to collect data to make notes on what you saw over the past 6 months, over the past year, over the past 2 years, so on and so forth. That's the only time that you may be on the charts for more than an hour in a day. But that's because you are intentionally scheduling the time to study this particular pair, this particular commodity, this cryptocurrency, whatever it is, right? And then the other thing that technical analysis allows us to do is set and forget. Listen, after we complete our analysis, we look at the market, it tells us what it needs to tell us, and we consider entering the market because we're like, yep, this is a high probability setup. Cool. Now you can set up your trades and then just let them play out. You don't have to sit there and be like, did it hit? Did it hit? Oh, what happened? What's going on? You don't have to do that. You can set your parameters and move on about your day. Parameters meaning if I say, hey, I'm expecting price to go up to this price point because I have identified an area of resistance. So I'm anticipating price coming up here. Well, I can set that as my profit area in my broker account. And then I could say, hey, according to my strategy, my safety net, meaning if price doesn't come up there and it does turn around and go down, then this is how much I am willing to lose. I'm fine with losing $50, $100, $1,000, whatever it is. I'm fine with losing that. Now, if price comes down there, I'm activating my safety net, which we call a stop loss. I have that in place. So if it hits that, I'm not losing more than I was comfortable with losing in the first place. So I'm determining how much I stand to lose, but I'm also determining how much I stand to gain based off of my analysis. All right. So that part is how technical analysis helps. If that makes sense, y'all, let me know. Type it makes sense in the comments. If you're watching a replay, if you're watching me live right now, which I see you, put it makes sense in the chat. All right. Now, that was the technical analysis piece. Well, risk management is the other part. I'm going to touch on it. You're probably going to hear this again next week, but oh well, I'm about to say it today. Okay? Because I want you to prepare mentally for it. So risk management, how does this help us? Number one, it protects your account, y'all. Proper risk management helps you to limit potential losses on every single trade. Okay? Using those tools, like I mentioned, that safety net, which we call a stop loss. Write that down. Stop loss. LOSS. Okay. A stop loss is our safety net. This ensures that no single trade can damage our account more than what we're comfortable with. We're not losing more than $50. We're not losing more than $100. We're not losing more than what we're comfortable with. Okay. That's part one. Number two is risk management helps us to have or regain emotional control. Emotional control. How? Because we're predetermining our risk. Remember what I said with the lot size? That lot size, we want to establish how much that lot size with our amount of pips for our safety net stop loss, how much of that are we comfortable with losing? When we establish that first, now we can say, okay, I'm cool with that or I'm not cool with that. There it is. And we can adjust it accordingly. We can either increase it or decrease it before entering the trade. Guess what's going to happen? You're less likely to be worried about the trade. you're less likely to feel anxious. You're less likely to get frustrated. You're less likely for all of that because you have already predetermined the risk and you know I'm cool with it. I'm cool with going out here and I put it and hey, listen, I might lose that $10. I got a $1,000 account. I'm cool with losing the $10. Okay, whatever that amount is. And y'all, risk management helps us with consistency over time. Well, Leona, how is that possible? Because when we're applying like our risk to reward ratio that I talk about over and over and over again, if y'all was on with me last night, you probably heard me talk about risk to reward, because I definitely talked about that. Okay. But this ensures you only take trades that fit your strategy. Now, if you are a scalper, for my scalpers out there, I know y'all are not doing a risk to reward ratio because more than likely, you're looking for 10, 15, 20 pips. Like, you're not looking for big gains, right? You're in and out of the market 5 minutes or less. Got it. I totally get it. Okay. But if you're a day trader like me, you need to be looking at risk to reward. We should not, as day traders or swing traders, if I have any swing traders watching this, we should not be looking at anything that could potentially give us a risk to reward of 1-to-1, meaning I'm risking $50 to gain $50. A bare minimum should be 1-to-2. I'm risking $50 to gain $100. If that makes sense, let me know. It makes sense. Okay? When you are applying that as part of your risk management plan and you have established, every setup has to show me at least 1-to-2. If it doesn't show me that, I'm moving on to something else. Y'all, do you know how many options we have in the foreign exchange market? There is no reason for anyone to feel like, oh man, I have to trade this thing when you have all of these options. Okay? So when you're establishing that risk to reward ratio, it ensures you only take trades that fit your strategy, like I said, and also is making every trade more calculated and consistent. And y'all, this is even when you have limited time to review the market. It don't take you long to establish, oh yeah, this is a 1-to-1 risk to reward ratio. Oh, this is a 1-to-2 risk to reward. This is a 1-to-3 risk to reward. It doesn't take you long when you know what you're looking for. Okay? So at the end of the day, mastering these skills allows you to make smart, calculated decisions efficiently, y'all. And it just maximizes your value, maximizes the value of your time, while also minimizing the risk of significant losses that we see so many people experience in the foreign exchange market. Okay? Trust me, I'm telling y'all this because been there, done that. Been there, done that. I got it. Okay. Now we're going to dive into this and then I'm going to start sharing my screen. As a matter of fact, let me make sure I have this up so that way we are good to go. Okay, it's up. So we're going to get into technical analysis. Okay. So what is that? And then I'm going to start showing y'all the chart. TradingView.com, y'all. If you haven't pulled it up yet, go ahead and pull it up while I'm talking about technical analysis. So all this is like a method of us forecasting price movements. And we do this by analyzing past market data. So we look in the past to give us an idea of what could potentially happen in the future. So we use like I said, price patterns. I trade candlestick patterns. So the candlestick patterns are like a language. It's talking to me without actually using words. And I'm talking about like I'm on the phone with somebody and they're talking to me. I can actually look at the chart and those candlestick patterns are telling me what is happening in the market, right? And that you can also combine that with something we call technical indicators. If you want to get ahead of everyone else, write that down. Technical indicators. 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 Technical indicators. These are different tools that you can use to help you to quickly identify trends, quickly identify support and resistance, and then also potential entry and exit points, okay, for your trades. The goal, y'all, is just to attempt to consistently predict the likely direction of the market, and that's based on how it has behaved in the past. This helps us as traders to make more informed decisions, okay? Y'all, I cannot stress this enough. Technical analysis, especially for my scalpers, day traders, and swing traders. Not so much for position traders because you have more wiggle room and whatnot. But for those of us that are trading smaller time frames, technical analysis is crucial for helping traders like me, okay, and like you, if you are currently trading, to identify our potential entry and exit points, because it provides a structured way to interpret market data. We do that by analyzing past price movements and patterns. So now we can identify trends. I told y'all to write this down earlier. I need you to identify trends. Why? Because when we're recognizing the market is going up or down, or you may hear the terms uptrend, downtrend, or a sideways market, meaning the market is just moving like this. It's not really going up. It's not really going down. It's just kind of going like this. Right? Okay. So it helps us to decide when we're going to enter or exit a trade. So I'm gonna give you an example. Like, let's say we're buying, right? And there is an uptrend. We see that price has been going up. Well, now we have an idea. Okay, well, price could continue to go up to this point because we have done an analysis of the past and where price has consistently turned around in the past. So if price has consistently turned around, let's say here, then and price is right here right now. I don't know if y'all can see my hand, but price is right here right now. Then that means that we should be anticipating price coming up here and then eventually pushing what? Back down. Okay? That goes into support and resistance. But anyway, and then it's the opposite. So let's say price is up here, if you can see my hand, but then there's an area where price reversed a lot right here where my hand is. This hand is, right? So if we're up here and we're like, oh man, this is a really great selling opportunity. So we would set our profit here. We're here, and then price comes down and possibly does what? Push back up. Okay. So we can identify where there are trending markets going down, trending markets going up. All right. And this just increases our likelihood of profit, of success in the market. Now, the second thing, though, is spotting support and resistance. I told you to write that down earlier because we're not going to really be able to dive into it today because we're not going to have enough time. So next week, that's what I'll be touching on as soon as we get on, okay? But we're going to be able to spot support and resistance, okay? All this are key levels where price has been before is likely to reverse, or it could pause and do what? Go sideways. Okay, so you can see price doing this a bit, kind of like a wave, right? But it's not clearly going up. It's not clearly going down. Okay. Now traders can use these areas or use support and resistance levels to enter trades at support. So again, like I said, if price is down here and you've seen that prices come down, so let's say it was going up and then it pushed down, and you're like, huh. Well, I didn't get to enter from the top. So guess what? If it is a strong support, then guess what you can do? You can start to buy here, bam, take the price back up. Okay. Or you can, use resistance, and then you can use that to enter for a sale to push back down. Or you can use your support and resistance as exit areas. So if you were selling and then it hits the support, that could be your profit area. So you exit out the trade. If it was going up and this is your resistance here, then this is where you would exit the trade. Okay. So either one is perfectly fine. All right. But that is support and resistance. And then lastly, time. Time trades efficiently. Technical indicators like moving averages, our different oscillators, which you'll learn about next week, like the RSI and whatnot, they give signals that can help traders decide the best times or the best moments to open or to close a trade. And this helps with maximizing profits and minimizing losses. Now, I will tell you this, I am not a person that leans heavily on technical indicators. I lean more so heavily on my support and resistance and my top-down analysis, okay? But anyway, by using technical analysis, y'all, we as traders, we can make more precise decisions. Will we get them right every single time? Absolutely not, because the market is going to do what the market does. But it helps us to reduce the guesswork, and it also improves the overall success of our trades, okay? So instead of hearing technical analysis, y'all, sometimes, because I know somebody's like, I think I heard it before, but I'm not really sure. You may hear traders use terms like you need to get really good at charting. Okay. This is different from my medical people. This isn't the same charting as those folks in the medical profession. Okay. But they'll say you need to get really good at charting or markups. Markups just mean marking up your charts, meaning identifying key levels of support, resistance, using trend lines, so on and so forth. Okay. That's what they mean. All right. So we are about to go to TradingView here in a second because I want to show you guys. Let me see if I can share my screen. I want to show you guys what I'm looking at. Let's do this. 1 second. And if you're still with me, let me know. And if this is helping you, feel free to share this live stream with someone who is considering trading, with someone who is currently trading and maybe having a little bit of trouble. You might need to start over like I did, y'all. Okay, you might need to start over. Okay, so I'm going to go to something simple. I'm getting off a goal, y'all, so don't get excited. Don't get excited. Okay, so on TradingView, first of all, you need to identify what it is you want to look at. What do I want to analyze? I said this yesterday, and I also said this on Saturday. If you're just starting out trading in the foreign exchange market, y'all, please stick to the majors. Stick to the majors. Majors are Euro USD, okay? GBP USD, USD JPY, AUD USD, NZD USD, USD CHF, okay? Those 6, stick to that. As a beginner, that's like you're in elementary school, okay? You don't want to be jumping into gold. You don't want to be jumping into US 30 and Bitcoin and whatnot, and you have no idea how to analyze a chart. You have no idea what volatility will do to you emotionally, okay? So start there, stay there, get consistent with seeing progress there, get to the point where you're hitting your goals, whatever percentage it is that you want to see in gains per week, dollar amount, I don't care. Just make sure that you get in the results that you want first. Then you can graduate to trading your miners, which are other currencies that are part of well-known countries. Okay. So with this, we will also decide what time frame we are going to be looking at. I trade as with the candlestick patterns off of the 1 hour. Well, if you're like, well, Leona, what does that mean? That means each candle that you see here represents 1 hour of movement in the market. So this green candle means that movement has been moving up. Price has been going up for this hour. Okay, so we're going to go to where price is right now. So right now, the buyers have been in the building somewhat for this past hour. In the next 45 seconds over here, a new candle is going to appear, and that's going to tell us who is in control at this time. Okay, so right now we still have a little bit of buying momentum. It's not strong at all. So I wouldn't count like, oh yeah, Euro USD is about to just shoot up. Okay. So there you go. Red means that the sellers were dominating the market during that hour. If I were to change it to a higher time frame, say the 4 hour, then that means each candle represents 4 hours of movement. Okay, 4 hours of movement. This is 4 hours of movement. This is 4 hours of movement. This is 4 hours of movement. Okay. I'm not going to dive into these upper shadows and lower shadows and stuff because I don't have enough time for it. However, if you want to learn more, you can always register for the Day Trading 101 program. Totally self-paced, 30 days of information. You can get that at a much cheaper price than you would probably pay for some other stuff. As far as learning trading, you can get that, and I break all that stuff down. All right. So there we go. So I'm gonna go back to the 1 hour, y'all. Just remember, each time you go, each one of these candles represents the amount of movement in the market for that time. Okay, so we're on the 1 hour. So we have 1 hour. This is starting a new hour right here. So from 1 p.m. Central Standard Time to 1:59 p.m. Central Standard Time, this candle is going to represent movement in the market. Okay, whatever it says. So now, price action, price action, price action. As traders, we will need to learn to read and interpret price movements on a chart. So I'm going to do my best to explain what you will understand in a way that you're going to understand, movement on here. And then I'm going to show you on this chart that you see on my screen. All right. So I want you to imagine right now. As a matter of fact, let me do this. Before I say that, I want you, oh, wrong button. I want to change this to a line chart. And I'll explain why I'm doing it. All right. Now I'm going to say it. Let's say this. Okay, so I want you to imagine on my screen right now, I want you to imagine you're looking at a chart like a mountain range. Okay. So instead of seeing mountains, it's showing the price of something going up or down over time. So here's how we're going to read it. When the line goes up on the chart, right, this means that price is getting higher. So I want you to think of it like you're climbing a hill. Got it? So let me show you. So like right here, price went up, right? So right here, you're climbing the hill. You climb, and now you're at the top of the hill. Got it? Well, when price goes down, the line goes down. It's like you're climbing down the hill or you're walking down the hill. This is a pretty steep hill, right? But you're going down the hill. Everybody got it so far? If you're following me, let me know, okay? Because I don't want to lose anybody. So the line goes up. You're looking at, let me get that off of there. Okay, line goes up. You're pretty much climbing a hill. Okay, line goes down. That means price is going lower and you're walking down the hill. Okay, now, if it's flat, this little spot right here is, as a matter of fact, well, this is kind of flat too. So it's kind of flat here, right? Definitely flat here. This is like a valley. Okay, this is considered sideways. The market is moving sideways at the time. So in this case, there will be very small body candles, really, really tiny candles. As a matter of fact, let me show you. Check this out. So I'm going to do this. So right here in this circle, right here, just keep your eyes there. And I want you to see they're going to be very, very small body. Like it's almost like a straight line probably. Okay. Keep your eyes there. So see, it has a little straight line. Okay. So that's telling us that price has not really decided what it wants to do. That's called indecision. And so the market is going to move sideways. All right. Cool. So when we see this flat line and we have this moving sideways, then it's just like we're walking in a straight path. So we are not seeing the hill. We're not going up a hill. We're not going down a hill. We're just walking straight ahead. Okay. Now, when we see big jumps versus small jumps, it's like if the line makes a big jump up, that just means that the price suddenly went up fast. So looking at this again, let me change it back to a line chart because it's easier for beginners to see. So like, let's say, so this just went straight up. Shoot, straight up. Let's see if I can find another one. That one isn't straight up. I got more going straight down than I do have up on here. See, this one's straight down. Look at that. Bam, that's straight down. But this is straight up, okay? So when we have the market or the lines going straight up like this, right, then that just tells us that price just went up really fast. But if we have little areas, like it's going up, down, kind of like that, then that's just telling us it's consistent with small jumps. This just means that the market doesn't move much up or down, but the price is changing. It's just moving in smaller amounts. Okay. So looking at this, you see, even right here, it's going up and down, up, down, up. Now you have boom, down. Okay. So that's a huge jump off a cliff. Right? If that makes sense, let me know. This is a huge jump off a cliff. Okay. So price just dropped dramatically. All right. So if looking at the candlesticks right now is a little confusing, change it to the line chart so that way you can just identify that what you're attempting to see. How often is the market going up? Is it going straight up or is it doing this? Is it going straight down like what we just saw, or is it doing this? Okay. So now you can start interpreting the movement. So if the line is going up and up and up and up, like climbing a tall mountain, it will be a good time to buy because price is getting stronger. The buyers are in the building. You can identify areas where you can join the trend. Trading the trend is easier for beginners than trading a different type of market, which you'll learn about at a later date. Okay. So if the line is dropping like what you just saw, like just jumping off that cliff, okay, you know what I'm saying? Or you fell down the hill. I don't care however you want to, use the terminology, whatever. You might want to sell because the price is getting weaker. The sellers are in the building. They are dominating the charts at this time, right? So in simple terms, y'all, going on that line chart, it helps you to see clearly if the price is going up, down, or staying pretty consistent and going sideways. Okay. That helps you to decide when you want to buy and when you want to sell, when you want to exit a trade or when you want to enter a trade. Line charts are best for beginners to identify trends or sideways markets, especially when it's challenging to see with the candlesticks present. I'm saying that again for a reason. Y'all don't sit here and feel like I have to constantly stay on this line chart. Stay on the candlesticks here. Okay? Don't feel like you have to stay there all the time. Use it. See, okay, yeah, especially if you do candlestick patterns like myself. Yes, you're going to be on here. But when it's time for you to identify where you should be entering, establishing your profit areas, establishing your stop loss, guess what? This line chart would be easier for you to identify that. You'll click on line and it'll come up just like this. Okay? If that helps somebody, let me know. If that helps somebody, let me know. And then we're going to start wrapping this up here soon, y'all, because I'm over my time. So I want to finish this up with the trends and whatnot, and then give y'all some homework, and we'll pick it up next week. Okay? So I want y'all to just keep these terms in mind, or keep this term in mind. Like I said, trends, defining uptrends, downtrends, sideways markets. I need you to figure that out. Like what determines a uptrend? What determines a downtrend? What determines a sideways trend? Okay? Because remember, y'all, identifying these trends can help us as traders make smarter decisions, because it's going to show us the general direction of the market. This increases our chances of success over time. So if we're following an uptrend, let's just say an example, we're on Euro USD. Let's just say that it has been steadily rising. So let's see if we can find an uptrend. Because I'm seeing that it's been selling. Let me take this out. My bad, y'all. I thought that I had been on something. Okay, so here. So you see, this is sideways, right? It didn't really go up. It didn't really go down. Okay, so sideways here. Then we had up. It came down a bit. Then it went up again. Pushed down a bit. But guess what? This is higher. Let me do a little line real quick. This is the only time I use the horizontal ray. So price came up. Pull back here, right? Price came up. Pull down. This one is higher than this one, correct? So that tells us we may see a trend. Okay? Price came up again and didn't really do much. But then it came up again. Guess what? This one is higher than this one. This one is higher than this one, correct? This one is higher than this one, correct? If I'm wrong, please let me know. All right? Then price came up some more. Up, it kind of pulled. Didn't really do much. Came up. Then it flatlined here slightly. So guess what? This one is higher than this one. Yes. Okay. This one is higher than this one. Yes. These two right here. Yeah. Okay. This one is higher than this one. So now you had, if you missed joining the or catching the buy trend before it really took off, if you missed it here, that's fine. This was your next opportunity. When price pulled back down, you could have said, oh, okay, well, price could come back up again. Cool. All right, cool. Because we would identify support, whatever. So now price comes up here. Okay, well, does the market show me something when I turn it to candlesticks? Does it show me something to say I can rejoin the trend? Yes? No? Okay, cool. Well, guess what? It went up again. Then, if you missed this, it came up again. All right? So now I'm going to change it to candlesticks. So for my people who trade candlestick patterns, you may identify patterns at these areas. You may. It's not a guarantee 100%, but guess what we see? I see a bullish engulfing. That confirms. Okay? I see a bullish harami. That confirms. Right? I see another bullish engulfing. That confirms. I see another bullish engulfing. That confirms. So at each one of these lines, when I turn it to a line chart, I see a candlestick pattern that represents the bullish market that tells me, Leona, you can rejoin the trend. Okay? Now, everybody don't trade candlestick patterns, so don't get lost in that. All right? If you want to learn candlestick patterns, though, you can sign up for the Day Trading 101 program. Cool. Bam. You'll learn that with me. Okay? So now, changing it back to a line chart. So now let's say, let me delete all this. So we saw what we could enter for a buy, right? Well, let's look for, let's see. I just saw it over here for the sale. Let me make this a bit. So price is consistently dropping. Now, I don't like this, but we're still going to do the same thing. Okay, so let me change this. Okay, get this horizontal ray. So price came down, right? Bam. Price pushed back up. Price came down again. Is this one higher than this one? Right? Okay, so now I'm going to start saying, is this one lower than this one? Moving forward, because this is how we identify a sell trend. We have lower highs and we have lower lows. Okay, so this is a low here. This is a lower low here. Okay, so price, it kind of consolidated, or it went sideways here. It didn't really go up. It didn't really go down, right? Sideways. Excuse me, sideways here. And then what? We rolling down the hill. Roll down the hill. And then price attempts to come back up. So guess what we're going to do? Bam. Right here. So is this one lower than this one? Yes or yes? This one is lower than this one. Yes or yes? Right? Then we see price came down again. So you walking down the hill. You didn't roll down the hill this time. You actually walked down the hill. Okay, cool. So let me put this little right here. Okay. Is this one lower than this one? Yes or yes? This one's lower than this one. Yes or yes? Okay. So now we see that we have a sell trend that's happening, but it has a tendency to do what? Go sideways. So that tells you if you are going to scalp, you may be in and out pretty fast. But if you're going to day trade, there may be a potential for you to do what? Get stuck in the trade for a while. Because remember, each one of these candles represents 1 hour of movement. So when it does this and goes sideways, this is 1 hour, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Then 13 is when you start rolling down the hill. That makes sense? So if you know, oh, I don't want to be in a trade that long, then guess what? You may not want to trade Euro USD if you collect enough data that shows you it has a tendency to repetitively do stuff like this. Okay, let me change back to a line because this is for beginners. One more. So this was the drop. Now price came down. So that means you walking down the hill. You walking down the hill. Okay. Here we go. One more. Is this one lower than this? Yes or yes? And then what happens? It goes sideways again. And then you kind of walking down some stairs. And then it does it again. This is another little slight low. This one is lower than this one though, right? Okay, but then we do what? Sideways again. Then you go down again. You get the tumbling down the hill. Is this one lower than this? Yes or yes? Now it does that what? Sideways again. Y'all, doing the line charts for beginners is going to help you to identify what type of markets you're looking at faster. Now, once you get consistent and proficient with identifying on line chart, then you'll be able to start seeing it on the candles, right? You'll be able to start seeing that because you're going to be bouncing between the two. So let's look at candles now. So now we see price came down here, pushed up, it did the sideways, came down, sideways again, came down a little bit, sideways again, came down a little bit again, pushed up, sideways, and then fall off the cliff. Okay? Does that make sense? I just want to make sure that now you understand how to use the line chart. If looking at the candles is confusing to you, change it to a line chart as a beginner so that way you can identify a trending market. You can see where you're rolling down the hill or walking down the hill, or you're flat. You went down the hill, but you're flat. Or if you're going up the hill, you're running up the hill, whichever one, okay? But now you're able to see which one you have going on. Y'all, I'm telling you now, please avoid trading in those sideways markets because like I said, especially if you're a day trader, you don't want to do that because you're going to be stuck for hours. Nobody wants to be stuck in a trade for hours. I don't know anybody who just wants to be stuck in a trade for hours. And now, if you're a swing trader, you're not going to really care because you're on higher time frames and you have your set it and forget it. You've done that. But as a day trader, you want to be out of the trade before the trading day ends. Trading day ends at 5 p.m. Eastern Standard Time. So you need to be out of your trade before 5 p.m. Eastern Standard Time, Monday to Friday. Because a new trading day starts every single day. So today is what, Thursday? So a new trading day is going to start at 6 p.m. Eastern Standard Time. So that means you would have to pay a fee to your broker for rolling you over into a new trading day. That eats up your profit over time. Hence why day traders like myself don't want to be in a trade longer than a day. We want to be in and out that day. Scalpers want to be in and out in a few minutes. Swing traders, they don't care about it. They'll be in the trade for days, weeks, because more than likely they have bigger accounts. They're not really, into moving into the market fast. They take their time, you know what I'm saying? Like they're cool with it. It doesn't sway them either way. about being in a trade for days or being in a trade for minutes. They're fine either way. Okay. So I need you to look at that, and I need you to identify if a market is going up or down, or if it's going sideways. If it's going sideways, like I said, avoid entering the trade because the market isn't trending strongly in either direction, and that means that you could be stuck in that forever. So I want you to wait for a clear trend up or down to prevent you from getting stuck in an unprofitable position. Everybody got it? Okay. So now we're going to get into trend reversals, and then we're going to wrap this up, y'all. You're going to get your homework here in a minute. So we're going to get into trend reversals. Exiting trades early. So let's just say again, you identify that uptrend with Euro USD, and it's been in an uptrend for a long time, but you see that it's starting to slow down. The candlestick bodies are getting smaller. Y'all see this? So when they're getting smaller like this, that's telling you there's not enough momentum or not enough liquidity in the market at that time. So you don't have a whole lot of buyers. You don't have a whole lot of sellers. It's just kind of in between. Y'all, I want you to just make sure that you notice that and just consider exiting the trade, especially if your profit area is a long way away. Okay. And you're like, hey, listen, the market's going to be closing in possibly the next hour. Man, listen, I'm going to just take my profit so far and get out. Okay. This is for my people who are day traders. If you want to just take your profit and get out, that is fine. Okay. Now, if you want to hold it, then, and go on into the next trading day, totally up to you. But identifying this trend reversal early allows you to exit the trade before the market moves too far against you, and then causing you to lose your profit that you already had at the beginning. You protect your profit or minimize loss by recognizing the shift in momentum. Okay, so smaller body candles means that the momentum is slowing down, and there could potentially be a price reversal, especially if you identify an area of support or resistance, which we'll talk about next week. Okay. Now, again, identifying trends, y'all, gives us as traders clear signals for buying, for selling, and for staying out of the market. Okay. For beginners specifically, it helps to reduce the guesswork and improves the chances of making successful trades. The more you analyze the market and identify the trends, the better you become at consistent profit, consistent positive results. This is the easiest way to see consistent positive results, y'all, in the market, especially as a newbie. But I want to make sure y'all know something, because I don't want to tell y'all that and then you are not aware of this, okay, before you get your homework assignment. The FOREX market is estimated to trend between 20 and 30% of the time. So that means you're leaving somewhere between 70 to 80% of the time for the market to be doing something called ranging. And that's moving sideways without a clear direction. However, you can use something called support and resistance when the market is moving when the market is ranging. Okay. That's something you will have to learn later, because I'm not going to go into ranging markets because this is more so for beginners. Ranging markets will be discussed during the Day Trading 101. Okay. So if you want to know more about ranging markets and how you can take advantage of that 70 to 80% of the time the market is moving that direction, guess what? Tune into that. Okay. Go register right now. Click the link in the description of this video. So this just means most of the time, y'all, the market is moving within a range. It's bouncing between areas of support and areas of resistance without forming a clear upward or downward trend. Okay. This matters because during the 20 to 30% of the time the market trends, traders can capitalize on strong directional movements. That means you may be in and out of the market faster when the market is trending. Okay. Following the trend works best, y'all. Following the trend works best. Y'all might have heard the trend is your friend. This is very true, especially for beginners. Once you get more consistent, then we can talk about range bound. But trending for beginners is going to be easier. It's faster to get, and you become more consistent with profit. Okay. Ranging markets, like I said, is 70 to 80% of the time. Traders can use range bound strategies like buying at support and selling at resistance, or using breakout strategies, which I do a lot with crypto, when prices move out of that range. But I need y'all to understand these statistics, okay? Because it's going to help you as a trader to find the strategy that best suits the current market conditions, okay? This ultimately improves your chances of overall success, y'all. So if this makes sense, if this has been making sense, let me know in the comments. Let me know in the comments. You know what, Leona? This has been work for me. I get it. I'm rolling with you. I'm understanding. This is making perfect sense to me. Let me know in the comments if you're watching the replay. Let me know in the comments if you're watching live. Let me know in the chat, okay? Y'all, don't forget that if you're finding this video helpful, if you have found it helpful so far, share. Sharing is caring. Sharing is caring. Sharing is caring, okay? So due to time, y'all, we're gonna have to pick up the rest of this on next week, because we'll be going on to support and resistance. I'll be using my charts to share with you all that. So let me stop sharing because I'm done talking about that. Talking about the chart for now. So we're going to talk about support and resistance. I'm going to show you different technical indicators that you can use when completing technical analysis, as well as risk management strategies. Okay. So for now, I'm going to give you your homework assignment until next week. Please do this. Okay. Please do this. The first thing I need you to do, okay, is select a currency pair out of those 6 majors that I gave you: Euro USD, GBP USD, USD CAD, okay, USD JPY, AUD USD, and NZD USD. Out of those 6, pick one of them. Just one, y'all. Don't do more than what I'm asking you to do right now. Pick one. Focus. Okay, please. Focus. Pick one. And I want you to practice identifying the trend. So you want to go from candles to line chart. Candles to line chart. Use that horizontal ray that I showed you, okay, and identify where the market turns around during that trend, where it pulls back and whatnot, okay? So if it's going down and it establishes a lower low, put a line there. When it comes back up and then it goes down and establishes another lower low, put a line there, okay? Use the line chart to help you identify it first, and then once you have that, change it to a candlestick, okay? Do the same thing for the buy. Establish the higher highs, okay? Price goes up and it's high here, put a line there. When it pulls down and then it goes up higher than this one, however high up it goes, put another line there, okay? Do that for the buy to help you to see where the market reverses, comes up, reverses, comes up, and so on and so forth for the buy, okay? I want you to do that over and over and over and over again with that one currency pair. Pick one, okay? Everybody got it. Now, if you have a broker, if you have a demo account or a live account, and you're like, hey, I want to just start from scratch, let me do that. Do that with your broker, okay? You can do it with your broker, or you can do it TradeView. Either one is perfectly fine, y'all. Just pick one currency, a major currency pair only. No US 30s, no Bitcoin, no gold, no, SPX 500, no oil, none of that. Pick a major currency pair and do that if you're going to do this homework, y'all. I don't care how long you've been trading. Please. This is to help you. Because if you have not seen consistent profit, and especially in a live account, and you've been trading for a year, 2 years, whatever it is, then we got to start over. Okay? Because there's something going on there, and we need to figure out what it is. All right, so there we go. Any questions? Any questions? Let me go to... Okay, I see you. That works for you. Awesome. Any questions at all? All right, I'm not seeing any questions. Listen, I have received this question a lot about identifying trends. So like, how do you know when to get out of the market? So I'm going to talk about support and resistance next week. And this is a really great tool to help you to get out of the market. So you know how I helped you to identify where your higher high is or your lower low is. you're going to use what we call support and resistance to help you to identify that in a trending market too. You can identify that in the trending market too. And then this way, you know, this is the time for me to get out. Okay. Or it helps you with identifying, I may want to get out. You combine that with seeing those smaller, consistent candles, bodies of the candles. When you're seeing that, and especially if you're already in profit, definitely that's a tool that you can use to help you to exit the market. Okay, support and resistance. So if you want to get ahead of the game, right, you can go ahead and start Googling, get on ChatGPT, whatever, watch a couple of videos if you want to. If you want me to send you mine to show you how I identify support and resistance, you can. But like I said, next week I'm going to be doing it anyway. Okay, so that's the main question I get. So since I don't see any in the chat, I'm going to leave it here, y'all. The next live, we'll pick up where we left off. We're going to get into support and resistance and then continue on with the technical analysis. Prayerfully, we're able to get to risk management. If not, we'll shut it down there and then pick up with risk management on the next live, okay? But we're going to pick it up on October 24th. October 24th is another Thursday. If Thursday is working for y'all, I'm going to keep it. But I'm just testing this out, y'all, to see what's the difference in viewers and if the times are working for y'all. So October 24th at 1 p.m. Eastern, 12 p.m. Central. That's 10 a.m. for my West Coast folks. Now, I'm giving y'all a heads up. This will be pre-recorded. Okay, so even if I am posing questions in the video, I will not be live because next week I will be spending time with my family because this has been a very, very, very busy 8 weeks for me and my family, and I need a break. I'll just keep it real with y'all. I need a break. I need to breathe. I need to let my brain rest because it's been an overload these past 8 weeks with school and everything, and you know, going back to college and whatnot. It's just been a lot, so I need a break. So next week I won't be personally live. It will be a pre-recorded session. So I'm going to be doing that. And then y'all will be able to hear the information. You can still type your questions in the chat or in the comments. I will be getting back to it. I'm coming back on next Sunday, that following Sunday, which is October 27th. Okay. So I'll be back in full effect on October 27th. I'll be back engaging with everybody then. But I'm not even gonna lie, y'all. I'm not gonna be live next week. Okay, so there's that. All right, so that is it. If y'all don't have anything else, tune in. Drop what you learned today. If you learned anything, if you found something helpful and it was a really great reminder for you, drop that thing in the comments. Okay. Also share. Hit that subscribe button if you loved it. Hit that notification bell if you want to hear more. And if you want to learn how I trade specifically, click the link in the description of this video and register for the Day Trading 101 program. Y'all, it's 30 days of trading education. You get a new lesson each day over that 30-day period. It's designed for beginners, but it's also very helpful for people who have been trading for a while that may need a refresher because you may have sat down trading for a while. You know what I'm saying? You may have not seeing consistent profits. So you're like, I just want to start over. And especially if you want to trade candlestick patterns like I do, that Day Trading 101 actually breaks down each candlestick pattern and I show you how to trade it right then, right there. Okay. And I also show my trading strategy, my trading system. Okay. So how I create a list before even opening up TradingView to consider analyzing the charts. So I'm not overwhelmed in the market. You shouldn't be overwhelmed in the market either. So that's the reason why I show you that as well with the Day Trading 101. So that is all I have, y'all. If you enjoyed it, give me the thumbs up on YouTube, like, heart on Facebook, share. Hit that subscribe button and also the notification bell. All right. So I'm going to leave y'all with my favorite quote, and that's from the legend. His name is Arthur Ashe, and he says, to start where you are, use what you have, and do what you can. Y'all have a great weekend and week. And I will see y'all when I come back October 27th. All right, y'all have a good one.